All right, what's up, everybody? Good morning. Welcome to the morning show here on Stock Market TV. Spencer, JC, and Steve with you this morning. Yes, we promised he'd be back, and he is. We'll talk about his day yesterday. What about our day yesterday? Interesting day in the market. New all-time highs for the Dow, so that's something. Breath not like the best. We'll talk about it. As far as our guest today was supposed to be Ari Wald, but he is out of town or out of pocket, one of those two. So we'll have him on later on in the week or next week. We got Jason Perz on the show instead, though. So Jason's always great. We love having him on. And you know what? Jason may be coming on a more regular basis. That's how good he is. So stay tuned for that. What else we got going on? What's up, chat? How we doing? Ron says he got murdered yesterday. Well, today's a new day, Ron. How about that? It's a new day. It's the best part of the market. There's always a new day. Let's get the show on the road here. Smash the like. And yeah, here we go.
All right, we're back. Steve Strazza back from, so you were in Marco Island.
Yeah, we went on a lovely little road trip this weekend.
Have fond memories of Marco Island, my friend. When I was back in like high school, Memorial Day weekend is traditionally hip hop weekend in Miami. Yeah. So Miami is the worst place on earth. You want to be as far away from Miami as humanly possible. What's hilarious, though, is hearing the stories from like random people from the Midwest who don't know it's hip hop weekend and they show up in Miami and they're like, what the fuck is this?
That's funny. That's like what we do for Fantasy Fest down here. You just get the hell out.
Dude, we need to create like a reality TV show where we send like random hillbillies from the middle of the country somewhere and just send them to Miami for hip hop weekend. Like that's comedy, dude. That is some funny stuff. So anyway, so every year Memorial Day weekend, we get everybody from Miami with a brain leaves Miami and goes to the West Coast, and we would go to Marco Island. And so I have very fond memories, like young, underage drinking. This is the first times that we would have hotel rooms. Like it was a lot of fun at a young age.
What is it like? Probably 2 hours.
Yeah, something like that. A couple hours.
Not bad at all. What's interesting though about that trip is you're driving through to go from Paradise on one side of the state to Paradise on the other side. You were going through very, very strange 2 hours of just kind of empty roads and alligators.
Yeah, but they got fences now.
There's like you're going through like 4 Indian reservations. They have
the fences. They didn't used to have them back then.
Well, I was wondering why. I know they call one of these roads that I was near Alligator Alley. I wasn't on it. I think I was just south, but parallel to it. So I was hoping to see like one across the road. They got
fences. Alligator Alley is actually Calle Ocho. A Street, Little Havana. If you keep going, that's Alligator Alley. Oh, fun fact.
And we went to Tamiami Drive or something, but we went through like 4 Indian reservations. That was really cool. We stopped at a couple national parks too.
Steve Strazza, Florida man. You're doing that serious Florida man stuff. And we got more. I want to hear more stories. We'll get to it on recess, but there's some Tiger King stories that I'm dying to hear. So, Spencer, let's get into the market because we got a lot of stuff. Nvidia going to be the next Dow component. They're kicking out Intel. Let's talk about it. For the record, this is an opinion piece. This is not fact yet.
You confused me this morning.
I just wanted to, you got to get everybody's attention. It has not been officially confirmed that Nvidia is replacing Intel in the Dow Jones Industrial Average, but I think it is. We'll get to that in a minute. Let's do a quick little rundown. You got the Dow futures down 70 points this morning after closing at a new all-time high yesterday. Highest close in the history of the Dow Jones Industrial Average yesterday, down 70 points this morning. That represents 15 basis points, so no big deal. S&P 500 futures down exactly the same, 10 points to the downside for S&P futures. And then the NASDAQ futures down 20 basis points. So slightly down, but pretty much a nothing burger so far in the market. Bonds getting hit pretty hard, though, down 0.2%. down to 124 on the 30-year futures. Crude oil, just under 77, down 0.75% this morning. You got copper, 422, flat on the day. Gold down 0.5%, 25.40. Silver down 0.25%, just a hair under 30. With the volatility index still at 16. Over in the old funny money, let's see what's going on over there. Any big reactions overnight or not really? Not really. Bitcoin 62,000. Sorry, I gave people a heart attack there.
Hello.
62,400, down 500 points on the day. Ethereum 2623, down 60 points on the day. That's 2%. Solana 154, down 2% on the day. Binance 550, flat on the day. Total crypto market cap, Spencer Israel, 2.13 trillion, with Bitcoin dominance still above 57%. What stands out this morning?
Nothing actually.
Wow, nothing.
We have
Is the fact that nothing's going on, is that not somewhat surprising, or it's the last week of summer?
Yeah.
And so this is what it is. Is that what it is? It's just the last week of summer?
I think so.
Do you want to discuss whipsaw hunting season?
Ooh, I like it, Strazza. I like how you're coming in hot from vacay.
And the question about Nvidia is less, will it be added to the Dow? It's, will it have to split its stock price again by the time they finally add it? That's the question.
Also true, Steve Strazza. Also true. Okay, let's talk about whipsaw hunting season. Let's go over what we're talking about here first. First of all, for those like you got the Dow Jones Industrial Average, highest close ever. One Charles Henry Dow taught us approximately 140 years ago that closing prices were the most important price. And I am still a firm believer that that is true. There is wisdom in the closing price, and yesterday's closing price for the world's most important stock market index was the highest ever.
And yeah, another thing we know from guys like Charlie Dow is that new highs are not bearish.
Yeah, listen, it's not even about Charlie Dow. Go back and study every bull market in history.
Yeah,
you're going to find a lot of new highs along the way. Very normal. Then go back and study all the bear markets. You're not going to see a lot of new all-time highs in bear markets, right? You could take my word for it, or you can go back and look for yourself. I've actually done the work. I've gone back. When you study bear markets, you're just not seeing a lot of new all-time highs from the Dow in those environments, right? I encourage you to go check it out, please. Okay, so look at the performance since the beginning of last year from Nvidia and from Intel.
Do it
about that
over the last 3 years, 5 years, 10 years.
Hold on. It gets better. It gets better. You're stealing my thunder, Strazza.
Right,
you're coming in hot this morning. I like it. I like it. You're getting ahead of yourself. I got the next one. I'm setting it up, right? You got to set it up. Set it up, right? So I'm setting it up. So here's just since last year, it's about a year and a half or so. You got Nvidia up just slightly 765%. No big deal. Yeah. And Intel down 20 somehow in the middle of a bull market. Intel, you suck at life, Intel.
Really
like
bad.
just
really
like
bad.
Look at yourself in the mirror. Look at this, Intel. You suck. So next Dow, the next Dow transition, if you will, in my humble opinion, is going to be Intel gets the boot. See what I did there? Because Walgreens Boot Alliance just got kicked out.
Yeah.
Intel's going to get the boot. See what I did there?
Yeah, that's good.
Right.
You know, I would say it's provocative, but it's not.
Next chart, please.
Like, this is happening. The fact it hasn't already is kind of...
It's a little surprising, not going to lie. No, the other way.
You know, in JC, we talked about, like, last week...
Spencer.
Shorting a semiconductor that was just showing relative weakness this whole cycle. If you're a semiconductor stock and you're not going up over the past year and a half, 2 years, like, that's a problem. That whole group has been red hot, on fire. And then you look at a chart like Intel. It's depressing.
Oh, hold on. I'm here blaming Spencer. It was actually my fault.
Bad.
Sorry, Spencer. It's on me, buddy. It's on me. All right.
Robbie Gupta in the chat is not wrong. You know, they have had a lot of help, but hasn't seemed to help him yet.
So this is the performance of Nvidia and Intel since Intel was added to the Dow on November the 1st, 1999.
Wow.
Yeah, it's a lot of commas and zeros, huh?
Wow.
So this is the performance of Nvidia since Intel was added to the Dow. Since Intel was added to the Dow on November the 1st, 1999, Intel is somehow down 6.7%.
No.
By the way, it gets worse. This is total return.
Stop. This is incredible. The cool part about this is less that Nvidia is up like almost 300,000%, and more that over 25 years, this blue chip technology stock has made you $0. That's incredible.
Pays a 2.5%.
Wait, I'm sorry. Did you say this is total? You said this is total return?
Total return.
My mind is blown.
Wow. Even with the dividend.
With the dividend, this piece of shit is down almost 7% since it was added to the Dow Jones Industrial Average. Meanwhile, check my math. Nvidia is up 281,500%.
You know, and even this market, we've been looking around and we've been saying, you know, some of these legacy tech stocks, whether it's IBM or Cisco or Oracle, HP, like these stocks are working. And Intel used to fall into that group of like legacy tech, old tech, value tech, and still nothing from these guys. So it's really amazing how bad the performance has been from this stock.
So can we circle back? My original premise: Nvidia is going to be added to the Dow, and Intel's getting the boot. Everyone agrees? We all agree. The question is,
yeah.
Strazza nailed the next question. The next question is, will Nvidia have to split their stock again before getting added to the Dow? Great question, Strazza.
Yeah, the Dow committee's got to get their act together. Brian Harris, you're right. Give Kathy Wood her flowers. She's right again. Incredible. I mean, she's just wow. Yeah.
What did she do now?
She's been very bearish Intel since the inception of the ARK funds.
So needless to say, I think we can all agree, whether the Dow committee hasn't agreed or not, we can all agree that Nvidia is the most important stock in the most important industry group in America, maybe even the world. Steve Strazza, is there and what is the most important industry group in the world?
Semiconductors.
That's it. That's the answer. So no pushback, no JC, nothing.
Oh.
JC's absolutely right. This is it.
You could go on to even make like some of these scary bear people will take a company like Taiwan Semi and paint like a very scary story about like whatever would happen if their factories had to shut down or come offline for a couple days. And it's true, things in the supply chain would break if some of these companies stopped doing business.
By the way, we've been saying how important semiconductors are before semis and chips got cool a couple of years ago. I've been saying that that's how I learned it. The way I learned it was you can't have tech without chips. And in every bull market ever, technology is a leader and an outperformer in pretty much all of them. So to me, semis are so important that we've talked about kicking out the Dow transports and bringing in the semis. Like that's how important. And we haven't gotten that far. It's more of like semis also versus a semis instead. But the fact that that's even a conversation goes to show you how important we think semis are, and not just recently, going back a long, long time.
Yeah, right. Like we didn't invent this, but it's so true. Semiconductors, chips are in everything, so they're by far the most important input to the world economy. Bottom line.
So we put together a semiconductors report because I am not one of these like earnings. Like for me, I wish companies didn't report earnings at all. To be honest, that's one of the things I love about crypto is that there's no earnings. It's fantastic. But this is the world we live in. And tomorrow afternoon, we will have the quarterly earnings release from the most important company in the most important industry group on the planet. So even if I wish that they didn't report earnings at all, and I wish that tomorrow would just be over with already, I do wish all those things. I don't have a say in the matter, right? I don't get a vote. So we have to, we can't trade in the market we wish we had or the market we think we should have. We have to trade in the market that we have in front of us. And tomorrow's Nvidia earnings, all eyes on this. And it's less about what they say. Quite frankly, I don't give a shit what they say. The conference call is going to be a huge waste of time, in my opinion. What we want to see is how the market behaves. And not just Nvidia itself. Nvidia, very important, obviously. But there's going to be so much movement in so many other things that I think that there's going to be a lot of opportunities on Wednesday afternoon going into Thursday. And we'll be right here talking about it. So, Spencer, I know you dropped the link. If you haven't read the report, it's short and sweet, quick and to the point. I think it's a good preview going into tomorrow's numbers.
Do you mind if I do a little bit of fundamental work on it?
Like
a little bit of earnings work? Mind if I talk a little bit about like sales and margins and things?
Yeah, knock yourself out.
All right. Do a little bit of that. We'll do a little bit.
Everyone, earmuffs.
We'll sprinkle a little bit of fundamental talk in. Not too much.
I'm cool with that. I don't have a problem with that. You guys can get fundamental if you want. I'll focus on the price action. That's cool.
All right, you be the price guy.
I'll be the price guy.
I'll be like the DCF guy. I'll just come on saying some crazy shit about like, their free cash flow.
Is DCF anything like a DTF? No.
It depends how much you like to party,
Fair enough. Yeah. Different strokes for different folks, as they say.
Yep. Stock market, Mike, you're right. You can't have caviar without the chips either.
Right? Important. I get the little plastic spoon and I just go all in, and you do too. Don't front.
I just dip, but I like to dip the chip.
You like to dip the chip.
Yeah.
Keep it classy, Strazza. Come on. Keep it classy. All right. You're eating caviar. You're drinking champagne, and you're just treating it like chips and salsa, like some kind of like animal.
Yeah. It doesn't last. It really doesn't last.
It doesn't.
It's okay.
Another one, please.
Almost.
Where's the rest of it? What is this? Caviar for ants? What is this?
Oh God.
It's only funny because it's true. Spencer, how do you feel about all this? You know how I feel. You know how Strazza feels as a man's man that you are with that beard. How do you think about all this?
How do I think about Nvidia?
How do you think about like how we approach this, right?
Yeah.
Most important stock in the most important industry group in the world, reporting earnings. We don't care what Jared Wang has to say. We only care about how the market reacts to these things. Like that whole philosophy in life. Like, how does a man's man with the Abe Lincoln beard, how do you think about it?
Yeah, I mean, I agree with that. I think fundamentals like aren't like with a stock like Nvidia. Like, what are the fundamentals going to tell you that like the chart won't? Right? They're not going to tell you anything that the chart's not going to tell you, because the chart looks like it does. Right? Maybe if it were Nvidia, maybe if it were a case of like, a company goes through it, there's a huge correction and the stock crashes, but the fundamentals don't change, and the Amazon a la 2001 or whatever, right? But like, I don't think the fundamentals of Nvidia are going to tell you anything that the chart doesn't tell you.
The fundamentals for Nvidia, though, maybe not on this report, but there was a moment in time, 5 earnings reports ago now, back in May of last year, where the fundamentals for Nvidia did change drastically.
Yes.
Right? Because there was a moment in time early last year when they began selling these AI chips, and no one thought that their performance would be what it was, right? And they've been blowing out every report ever since. This will be number 6 now, since that moment. So while you're right, I think what we learned last year is what matters. Now it's a case of like, are you going to grow revenue at 50% in the future, or more like 30%, right? Because that's going to significantly affect.
Right. And like, God forbid, like what happens if they come out with like a less than like a number that doesn't blow the roof off, right? Like
that'll happen one day.
Yeah.
And
that's going to happen.
We'll be close to the end.
Eventually.
I think what'll happen even before that, Spencer, is they'll come out with a number that does, just knock it out of the park and is great, and the market will still not reward them. Because what happens in situations like this, the market goes into straight euphoria mode, right? We get a parabolic uptrend. The valuation of the stock rises to absolutely insane levels. We call these moments bubbles, right? And that will come, and that will happen to Nvidia. It will get to a point where the stock is ridiculously priced and people are still buying it. And then they'll come out with an earnings report and the market will be like, that's it. It's over, guys. It's just not good enough anymore. And it becomes more of a liquidity issue, an evaluation issue at that moment.
Yeah. Something we'll talk about tomorrow as well is, one of the best ways to play an Nvidia earnings report is not via Nvidia, right? It's via all the other names because they're all going to move on
I
this.
think the theme here is bigger than Nvidia. Nvidia is the poster child for a broader semiconductor theme and really AI trade theme, right?
Yes, that's true.
And you're right. As long as Nvidia kind of keeps working, I think there will be ancillary plays, right? That we can find, pick our spots in, that will probably have better return characteristics than Nvidia, just because of kind of the base that they're coming from. Nvidia is already expensive, guys. You know, it's not crazy, but it ain't cheap.
Listen, I know we've talked about the performance of some of these components when they get kicked out of the Dow, when they get included in the Dow. We talked about how when Exxon was kicked out for Salesforce stopped going up, started going down.
Yeah.
Exxon stopped going down, started going up. Right?
Yeah.
We know how that works. I got one more before we bring in Kenny here. Slide 2, Spencer. Take a look at this is the performance of General Electric when it was kicked out of the Dow in favor of Walgreens their infinite wisdom.
Yeah, too good.
I know this is Strazza from Connecticut, so this is near and dear to his heart. General Electric, an original Dow component from the late 1800s. Spencer, if you could throw up slide 2, please.
Thank you for using the proper name.
General Electric, not GE Aerospace.
Don't know what that
in Strazza's head, although the name of the company is now officially GE Aerospace. So since June the 18th of 2018, when they kicked out GE, one of the generals gone. GE's up 170% since then. Walgreens. Can't imagine why they thought Walgreens would be a great addition to the Dow Jones Industrial Average, but they did. So, and Walgreens is down 80% somehow since then.
So what you're talking about is one of these magical market phenomena. No one can explain it, but it's like the Dow Selection Committee really does have special powers over these things. I don't know anybody else who's ever done it this well. Truly incredible.
Speaking of,
is it that simple to just
what else could
buy the one that gets kicked out and sell the one that gets included? No.
Why not? Why not? At this point, we have the data.
It's not that simple. It doesn't always work that way. I've gone back.
No, listen, we would never do that, but this is real. This stuff is
when
real.
They add Nvidia to the Dow, that's when we sell it?
Listen, as sarcastic as we're being, JC, it almost happens every time. Like if you did trade a system based on that, I can't imagine. We could back test it for
it's not that complicated to back test. We have the data. All right, let's back test it. How far? 40 years? That's about right.
Probably insane. We could go back to at least the 90s, I know.
Yeah, we can go back to the 90s. We can go back 30 years.
Yep.
We'll go back to May the 6th of 1991 when Caterpillar, JP Morgan, and Disney went in replacing, ready for this? American Can, Navistar, and US Steel were kicked out in May of 1991. For Caterpillar, JP Morgan, and Disney, that seems to have worked out pretty well. For them.
Also crazy that JP Morgan and Caterpillar were added that late in the game. That's crazy. JP Morgan? That was just added in 91?
91, yep. Really? And then there were no changes until 1997. This was March the 17th of 1997 when Travelers, Hewlett-Packard, Johnson & Johnson, and Walmart replaced Westinghouse, Texaco, and Bethlehem Steel.
Listen, a lot of these, JC, when we go back, the ones that they're kicking out back then were like commodity, old economy businesses. And as you know, many of them have actually even gone away.
Bethlehem Steel did not come back, which I'm very grateful for, because number one, it reiterates that how bad of an idea it is to pay people pensions that don't work at your company anymore instead of
before we
wait. money for research and development. You
don't have time for the pension.
Hold on, one more. So that's number one. Number two, unions are communists. And then number two, now Bethlehem Steel, because they make bad decisions because they don't understand economics 101, it is now an arts and music center. And I get to see Jerry Seinfeld, Slash. So thank you, Bethlehem Steel executives, for being communists. Forever grateful.
He's talking about pensions again, next segment, but they also sell steel, not software. So, maybe it was just a matter of time.
You can't pay people that haven't worked there in
Right.
decades.
Hey,
It's just
speaking of
math.
GE, Steve, you know where I was this weekend? I was in Schenectady, New York.
Wow, big GE town. I think
Big
that's
GE
one of
town.
the headquarters,
The
right?
birthplace of a one Patrick Riley.
Oh, really?
Huh? The more you know.
I was
He
watching
went
the
to
sports.
Schenectady High School.
Yeah, wow.
Fun
All
fact.
right.
Shout
Kenny,
out.
you
Pat.
here? Kenny's here, right? Yeah.
Kenny's here. Let's do
All
it.
right.
It's been a long time coming. They ain't cuffing my clock, they tugging. Putting up numbers, 99 problems, and I still kept it 100. Hold up. Yeah.
Kenny Glick in the house with someone, man.
Yo, Westinghouse. Now we're talking my speed right there. Come on.
Kenny's old school, man. Kenny looks good. Kenny looks good, healthy, young. Kenny's like 100. How old are you, Kenny? You're up there.
I've died 3 times actually. Yeah.
Yeah. You probably felt like you were gonna die a few times along the way, right?
Yeah. Sure. I remember Westinghouse. I remember talking about them in my 5th grade math. It was the only teacher, which again, I was talking to some professors out there in college. It's amazing how little financial literacy courses there are out there. You know, they teach economics, they teach everything, but they don't teach like, you know, just your basic stock market fundamentals, you know, your basic stuff out there. So I was talking to somebody who started their own, you know, through an adjunct course in a college. Maybe I'm thinking about doing that because that's something interesting to talk about, bring to a college, you know, just try it out, figure out, you know, teach these kids a little bit about VWAP or a little technical analysis. So just a little something. You know, my math teacher really just opened my eyes to the whole market back in the 5th grade, and I was fascinated ever since. So Westinghouse, yes, those are the day.
Westinghouse was an original Dow 30 component, right? So the Dow Jones Industrial Average came up in like the 1890s, if I'm not mistaken, maybe late 1880s. But in 1928, when they got the when they raised it to 30, Westinghouse was part of that. Just a few names. I mean, man, American Sugar, Bethlehem Steel, Chrysler, General Motors.
Yeah,
Look
that's
at this.
funny. The Bethlehem Steel
International
Center.
Nickel, Radio Corporation. I mean, man. And
right, RCA, right?
Amazing. All right, Kenny, we're talking Dow components this morning. We got Nvidia earnings coming up tomorrow. Not a Dow component yet, but part of that same conversation, I would argue. Are you looking at big blue chips this morning, or you got something down the cap scale on the radar?
I'm looking exactly at the QQQ today. So really, it's a very ominous, quiet morning. There is no flashing lights. There's no weird stocks going up 600%. My screen is actually not moving, and that's very, very rare, except for the Qs. So we saw some weakness yesterday. You saw UVXY perk up. I thought they might try to throw a little curveball by us, you know, before the Nvidia report, and I think we're in it. So I think we could go down another 5 or 6, and then all hell's going to break loose after this report. I mean, I think there's going to be volatility, but it would be kind of funny if there's no volatility. We just go into the weekend and start that volatility again. But I can't imagine Nvidia is going to sit around after that report. But if you look at the Qs, this monumental move that we've had off the 420 pivot on, you know, that low August, whatever that pseudo crash was. But, you know, we're right flirting with a couple of days lows. So if we break down, I think we could get down another 5 or 6 points, and you know, then we'll be where we need to be, and then Nvidia comes out, and we'll see where we go from there. So I'm chilling. Chilling is basically the word for it.
Do you think that volatility coming in tomorrow will be exacerbated based on the lack of sort of liquidity and stuff like that on a week like this?
I do. That's the thing. You know, again, I'm usually not even around Thursday and Friday of this week. You know, obviously you don't want not to be around on Thursday. But yeah, due to the lack of participation, maybe we do have a bigger move. Again, that's why I live in the moment. You know, again, it's hard to predict what's going to happen, especially coming in at the end of the month, especially because we had that mini crash that you got to keep factoring that in. That was a big moment. And I think that might take away from the volatility in September and October because we already had that crazy volatility. So it makes it so exciting, JC. So the unknown. So, when I live in the moment, I just live off the charts. And again, that's the way to stay sane. If you can stay sane in this business. And
talk to me about not overthinking this week, right? On a week like this, last week of the summer, even like the first week after Labor Day, like this kind of like these like bookends around Labor Day, do you try not to give it the price action? Do you give it less weighting? Like, how do you think about this week and next week?
Yeah, I know where you're going with that. It's one of those times where you could trade poorly because of the environment, and you'll be convinced that you're doing something wrong when it's just the market's not cooperating right now. So it's a good point. So I'm not going to take too much away from it. I'm just going to stay focused on, what normally works. And, UVXY up, QQQ down, SPYs down, that kind of thing. And again, if we could just coast, get through the next couple of days, make it through the Nvidia earnings, have an enjoyable weekend, see the fam, come back. Next week, you're kind of lazy still. And then again, we'll start talking about the Jewish holidays and selling Rosh Hashanah, buying Yom Kippur and all that stuff. And then September, October volatility. So yeah, to your point, don't take too much away from what we're going to see here. And then we'll start positioning, start taking it a little bit more serious 2 weeks from now. So again, don't do anything silly. Don't go over trading, and, try to enjoy the days. Again, we've had a really, really amazing year, other than me getting annihilated on some nakedness on some UVXY vol futures and bullshit like that. But, it's been a great year. There are days where you just say, okay, you know what? This is what the market's handing me. I'm going to take it. I'm going to run.
We're looking at an implied volatility percentile of 99. So that means that implied volatility for Nvidia has been lower over the last 12 months, 1% of the time.
Oh, okay. I thought you were going to say it's at the lowest point for a while.
The exact opposite. It's at the 99 percentile. So it is more volatile currently right now. Implied volatility is higher than at 99% of the time over the last year.
Right. And listen, I mean, where did it go down to? Did it go under the 90 when we were having that mini crash? I wasn't even watching. I probably should have been watching. But, we've had such an extreme sell-off already. Yeah, so it did get to that low, right to that 90 area.
14 points, by the way. I'm getting word from Sean over on the options desk. 14-point post-earnings move with the stock at 126. So you're looking at either 140, which are the highs from June, or you're looking to get back towards 110 or so to fill that gap from a couple of weeks ago. So it's really in this range, and the implied volatility and what the options market is pricing in is that it's going to remain within this range. So I think if it exceeds this and starts taking out 140 to the upside, or starts to break down, I think the bigger risk here is that it breaks out to the upside, and the market is not pricing that in. And I think that would be the added volatility. Remember, volatility goes in both ways.
Yeah, I'm with you. I mean, I think you see over 140, you're going to tack on another 10 easy and get to that big solid 150. And, then we'll see what goes on from there. But yeah, again, it's right now I'm in the moment, and Q short's been working. If you got my email this morning, that's the only trade we have on. UVXY showing us some strength. So again, I think they're just loosening it up right before the report, and then Nvidia is going to make everything all right.
I think you nailed it yesterday, Kenny, when you said, I'm usually gone this week. There's not a lot going on, but
hey, speaking of nailing it, did you guys trade the PDD? I mean, that was absolutely incredible. So let me show you this chart before I run. And if your guys are loving the VWAP on the intraday basis, start thinking about multiple time frames, and subscribe to this idea that it really does dictate where a stock's going to go. So take a look at this. This is your 2-year chart on PDD. Absolutely getting slammed. Where did it get slammed to? The 2-year VWAP. Pretty much, about $1 away. So when it was breaking down, normally I don't like shorting stocks that are already gapped down 18% at the open. But once it gave way, there was just 1 or 2 levels where it had to break down to get to that 2-year VWAP. And then we made a little stand there. We picked up around 97.50 with $1.50 risk. and a couple of our traders made 3 or 4 points on that little bounce. So again, you stay where the action is, you chart yourself, and you know, it was a very, very nice day on PDD. But today, like I said, very, very quiet, extremely quiet. It's weird in a way because there's really nothing moving except the chips and the Qs, which is understandable.
I'd love to see PDD getting back above 110. If it does, I think that could lead to a squeeze to the upside. I mean, I know that we're nowhere near there at this point. We got a long way to go. Actually, it's about 10% to get up there to the upside, but
yeah, right.
That's what I'm watching. In the meantime, it's kind of messy. Yeah, 98, down another percent today. All right.
Thanks a lot, Kenny.
Kenny, you're the man. Appreciate it, brother.
Yep. I'll see you guys in the room.
See him in the room, everybody. All right. I'm just kind of keeping an eye on things. Nothing's really going on this morning. Yeah, just a couple of headlines. We'll get to them after. Should I bring Jason on?
Please.
Jason Perz in the house. Here we go.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Oh, you're on mute. Wait a minute.
Got it.
There we go. Look at that. How we doing?
Good, man. Just got back from North Carolina. Me and my fiance took a nice trip to North Carolina. We're on the beach all weekend. It was awesome.
Outer Banks?
No, Wilmington. So, have you ever been to Wilmington?
I have never been to the beach in North Carolina.
Oh, it's Wilmington's like kind of a hidden spot. The waters are like incredibly blue. It's like probably like kind of a locals only spot, but man, it's probably the best beach on the East Coast, really. All the way up and down too. I'd say that. Besides the Keys, you got me beat, Steve.
Hey, they promised me Ari Wald. Who's this guy?
Sorry, man. Sorry.
What's up, dude? So
not much.
Nice beach weekend for the both of us.
Yeah.
Now, back to business. What's going on? What's on your mind?
Dude, there's so much on my mind right now. The market's in a really interesting place, and it's kind of like so precious metals are kind of like ringing the dinner bell. Let's say, most of the time the cycle works. We get to this late cycle environment. We start to see gold really rally, and we go, okay, why is gold rallying so much? And people all discount it. What's very interesting, too, is if you go to any of the gold stores, you notice that there's nobody there. There's no mania happening. There's nothing really saying that this is close to the end of this rally. But then the next thing you know, we start to get the other things starting to move. So we start to see the gold miners starting to move. Really good stuff. Also, Sam and Ian and everybody been putting out great stuff on the Gold Rush report in the last couple months. All these miners continue to rally. All these buy signals continue to hit. And now we're starting to see maybe silver starting to catch up. It got into a big value zone. Now it's kind of bouncing out of that value zone. And then really what happens, and go through any of the gold cycles, you'll see that basically gold starts to move, then bonds start to move. It's kind of a late cycle environment, but it doesn't mean that like the market's over. Too many people go, okay, this is the end of the rally. Everything's going to crash here. It's like, no, we're in a situation where we could see these rallies in, especially short dated bonds. We could see those should be the outperformer. Usually that's a liquidity increasing environment. So now we're going to start to see everything start to rally a little bit, especially bonds, gold. These are safe haven areas, but once again, you could go into the utilities, you can go into REITs, like all these areas are looking great here. So I think it's a very interesting environment.
Is the strength from gold, is what you're saying, that the strength from gold is alerting us of a new leg up for the broader commodity complex, or you don't want to overthink it?
I don't want to overthink it because I think too many people go, okay, if it's commodities, all commodities. And like it's the same thing that happened in 2022 and people are going, what the hell's going on with gold? We have this great run in the commodities and gold's not going anywhere. Gold's usually the thing that moves first. And it can be a risk off signal or it can be a start of a inflationary period. Think of more 2020. We got gold starting to move, then the commodities start to move with it after that. And then gold stops and then the commodities continue to move. Because gold is really a growth slowing type of thing. And so if we got growth slowing in the world, global growth slowing, even a little bit of inflation or even deflation sometimes, Gold actually does very well in those types of environments, whereas commodities like oil, which are really driving that whole commodity complex, those really do well from growth environments. And we're not seeing a growth environment right here, so I would say gold is doing its job here.
Are you keeping an eye on real rates? So does inflation play into this thesis?
Yeah, so real rates are very correlated to gold. They're highly correlated to gold. And so I do think my thesis also goes into, okay, gold could start to move. That's one thing that could be the beginning of this whole cycle, and we're seeing it. It's already happening. And then if the other commodities start to move with it, that would be a good sign that, hey, we are actually having a soft landing. Because for me, it's not I believe we're having a soft landing or a hard landing or any of that. For me, I'm just trying to look at the market and react to what it's doing, make money on these moves. So I'm looking at gold and going, okay, this could be a late cycle environment, but also if oil starts to catch a bit, if oil starts to break these major levels, starts to make new 52-week highs again. It was making them this year, maybe another one coming up soon. That would tell me a lot about this cycle, telling me that we're possibly in a soft landing, telling me that commodities like that could start to move. And we're more in a 70s style cycle where it's more of a inflation continues to peak. We think we've solved the inflation problem. Then we start to lower rates, inflation catches up again. So there's a lot of interesting stuff to kind of think about just in general with the commodities complex, but I would separate the two.
So when I look at the price action in some of these defensive assets, bonds, real estate, utilities, I think this is more about the bond market, right? And the direction, really speed to the downside in interest rates over the past couple of months, driving the performance out of those groups. But you would also say these are traditional safe havens. And then you look at something like the Japanese yen, and that's been working now, right? Over the short term, at least. Another traditional safe haven asset. Now you come on here and you're talking to me about precious metals and how they're working. And they're the only thing commodities work. Another traditional safe haven asset. So as much as I want to look at some of those other groups and say, it's really mostly interest rates, not defensive positioning, I could say the same thing about gold, right? It's a lot to do with interest rates, maybe not defensive positioning. But if all these defensive assets are now going up at the same time, does it matter why it is? Or if it's mostly because of interest rates, isn't it still just defensive or no?
Yes, but we can also look at it and go, like traders like us, we look at intermarket analysis a lot. And we can also look forward and go, hey, well, that probably means we are getting rate cuts. Obviously, at this point, we know we're getting a couple this year at the least. But obviously, it looks like we're getting rate cuts. Obviously, it looks like yields are going to go lower. And obviously, at the very least, the Fed rate has topped out. So either way, like you said, it doesn't really matter because it's like, what are we doing? We're trying to make money in these positions.
Yeah, look at that.
Yeah, so I really like this chart. For me, years ago, what I kind of cut my teeth on was this idea of relative value, not as a value investor, but as a technician, looking at it and going, okay, well, where do I want to be right now in this cycle? Do I want to be in something like stocks? Do I want to be in precious metals? Do I want to be in the commodities complex broadly? Bonds, whatever. So as I'm looking at that, I'm kind of going, okay, well, we have this cycle that kind of continues to happen again and again. Basically, rates kind of top out, the curve gets inverted, and then usually gold really likes that style of an environment. So as we come out of inversion, usually liquidity is thriving in some sort of way. Maybe it's for the reasons of a risk-off event. Sometimes it's a recession. Sometimes it's a big event that's happened. COVID would be another one. So looking at it that way and going, okay, well, we have some places to go here that are great, meaning short-dated bonds. Even the long bond looks great. You know, we're long bonds across the curve at the moment. It's crazy to see that because, you know me, I was one of the most bearish people on that whole complex. We didn't have a long position in bonds for years and years. Finally, we just started our first long position in bonds very recently. So far, so good. That's a new 52-week high happening.
Well, hold on, flip it back to the 2-year. Slow down. Traditionally, right? Throughout history, when we look back, when the Fed starts to cut rates, so we're entering a new, lower interest rate environment, Are you better off being in the short or the long?
So the short end of the curve, however, it's very hard as a retail investor. So if you're a retail investor and you're going, well, I'm going to buy the SHI ETF,
Yeah.
you're looking for major alpha, it's not going to happen. But if you're a futures trader, you can get into the short end of the curve. You can get into, they call them SOFR rate futures now. They used to be called Eurodollar futures, meaning the 3-month bond future. You can get in
up that way. You can
yes,
lever up to the futures
and
market.
also you can trade options in those markets. The options are very liquid. If you are a retail trader and you don't quite have the money to trade those big contracts in the bond futures, there are options on those. So you could trade the options on those, put some far dated calls out on the 2-year bond, or far dated calls out on the SOFR rate. Like there's a lot of major mispricing going on in the bond market right now.
So what Jason is saying too is that when the Fed starts to cut interest rates, basically the shorter end of the curve, something like a 2-year bond, is going to be linked far more closely to the Fed funds rate and move more with the Fed funds rate than something like the 10 or the 20. That doesn't mean that long bonds can't outperform, right? But there's more market forces going on as you move further out on the curve. So that's more of an unknown. If the Fed's going to come in and cut rates, something like the 2-year is going to follow, the 3-month and short end of the curve lower, and then you should get some price appreciation from those assets.
Yes, exactly. And that's why you kind of want to look at that. And as one, it's why the banks usually do good in that style of an environment. Usually the beginning of a reflationary period, you'll see the banks start to do well. But really it has to turn into a soft landing style environment from the Fed. And then we can kind of look at those other sectors. But for now, bonds look like an easy buy, especially the short end of the curve. The long end of the curve is going to do fine. Like it's not something where people are going to be like, well, I buy TLT. Great. You can buy TLT. You'll probably do well. At the same time, the smoothest, best risk to reward trade is going to be the short end of the curve. If you look at that chart again, if you guys go back and look at it, you can see the trends in that chart. 52-week highs, basically it just trends for years, and then 52-week lows, and it was to the downside for years. Bonds trend really well, and they run trend models very smoothly. So I like the idea of buying bonds here. Very easy trade, very simple trade. I haven't recommended it in years.
And you like it over longer time frames, right? This is a primary trend call.
This would be, I wouldn't say so. For me, I think the cycle is going to look more like this. I think it's going to look like the 70s. So in the 70s, what we saw was we would see basically bonds topped. Mm-hmm. And as they started to come down, just like they did recently, they start to try to make a new high. They're not going. I really doubt that we're going to see the 30-year bond or the 2-year bond start to make new highs ever again. At least in a long time. Like I shouldn't say ever again. Can't say can't in trading, but it's going to be a long time. So if we're looking at that, I would say primary trend. In a sense, maybe this is a 6-month trade, but really I think here is a good place to see a good rally. If you're a swing trader, a short-term position trader, even a medium-term position trader, like you can really probably generate some alpha here, but I wouldn't think this trade's going to last for years. I still would be structurally thinking that we're still in an inflationary cycle, and because we're in that inflationary cycle, I do think that that's going to turn into these being very short-lived. And then, basically, if you look at it, go back to the 70s. If you go back to the 70s, you'll see 3 peaks. There's a rally in the early 70s, another peak in the mid 70s, and then the final peak in 82. And so I kind of think that we're at that trough right now. And as we're kind of in that position, we're going to spike a little bit higher in the bonds. Obviously, yields are going to fall a bit. The Fed's going to say, hooray, we've cured inflation, and then inflation will probably rage back.
So, and of course, we don't know this without hindsight, but you're anticipating that this will be a counter trend move that we're seeing in terms of the lower rates, the move lower in rates markets.
But like you said earlier, does it matter? Does it matter that I think it's a counter trend move? No, it doesn't. What matters is we have the signals, that it's the right trade, the right signals, the right methodology for myself to get into a trade. So looking at it and going, hey, the price action is right. Let's see if this is short-lived or who knows. I know for a fact when I shorted the bond market in 20, I know for a fact I never thought it could get down here. I know that I wasn't anticipating this being a move for the next 2 years. Basically, that was from late 2020 all the way till bottomed this year, didn't it? Bottom this year, yeah. So at least either late 23 or this year. So I didn't think it could be a 2.5, 3-year move, but it was.
So Jason, I see that you brought along also a chart of silver. I believe that's your chart, right?
Yes.
You're going to be doing our Gold Rush video.
Yes, we're doing the Gold Rush video this week, me and Sam.
For the first time today. So Jason's going to be helping out with one of our precious metals products. Like, what are you guys planning on talking about in that video today? I know you might not know exactly yet, but silver?
Oh, we've got a lot to talk about in the precious metal space. I mean, gold miners look amazing. Silvers just came back into the value zone, came back out. Also, if you look, once again, you look at the options, look at them a year out. And a lot of people kind of go for the situation where they go, okay, well, silver and options a year out, there's so much implied volatility, there's so much stress there. Really, they price in so many things because as the time gets out further for options, the more volatility can come into play. But really, if you value it implied to realized over that same period of time, you'll see that these are at a discount. So you could basically buy these $35 calls 1 year out in SLV very easily to get some major alpha, and the risk to reward's really high. This is a 10x trade. These could be really great trades over a long period of time, and once again, size appropriately. 1% of your account, 2% of your account. Do not use your whole account for options. But if you're doing those things, you can really kind of generate some alpha for this trade. And the same with GDX. You look at GDX, you could kind of go, okay, similar kind of setup is coming on here. I really like the idea of buying calls on silver. And I also like the idea of there's a lot of gold miners that we're also looking at buying some options on as well. So hopefully you guys can check out that show today.
So you keep talking to me about these mispriced derivatives and all these different markets. So right now you're just talking about the equity market calls on some of these things being basically based on implied volatility standards being cheap.
Yes. So it's not only the equity market, mainly the futures market. The futures market looks even better, but SLV has some too. But the futures market is, we're not pricing in the fact that we can really, for example, if you were to get call options in the 2-year bond, thinking that we could possibly get the 2-year bond up to 3%, that's not that insane, but the calls for these are incredibly cheap right now. So basically the premium to the discount. So if we're looking at it, we have discounts kind of across the board in a lot of these areas. I like SOFR rate futures options, but once again, these are hard to trade products. If people do have questions, that's somewhere you have to really research, learn about, and ask questions from people who do it.
As someone who really does not participate in the futures market at all, I would imagine that the pricing for something like SLV calls would mimic or move with the pricing in silver futures. Is that something you see? If one's cheap, the other one's probably going to be cheap too.
Usually, so yes. So you can kind of usually grasp that, but the contracts sometimes change it. So for example, if you're buying like a March futures for silver, and you can find different call options available for that single contract. So that's why it gets kind of confusing to people. But once you really dive into it, you're like, oh, this is just kind of normal. I get it. But at first it's daunting. And I get that. It took me a long time to learn it. I spent many years trying to figure that out myself and talking to people.
I got to address the chat. You guys get distracted easily. There are cats in the background. There are humans in the background. I mean, we're really out here doing this. Don't worry about our backgrounds.
If everybody needs to know, I have three dogs. I had 4. One recently passed away, so I had 4 dogs. I have 3 dogs, 2 cats, and a bunch of bees in the backyard. So you might see all types of stuff.
Yeah, a lot. But do you allow the bees in the house? You don't sleep with the bees, just the cats.
So let's be honest here, Steve. Let's be honest. So if we're talking about the bees coming in the house. My fiance gets very upset from time to time because I will have when it gets close to cold season, like it's winter, I'm going outside and they're cold. I'm putting them in Tupperware. I'm like kind of warming them up. I'm bringing them back outside sometimes. So I get real, attached to my bees sometimes.
Dude, you're a freak. That's so awesome.
for sure.
That's so awesome. Well, you keep them warm. What a good bee daddy you are.
Yeah. Well, there was Halloween one year, and those packs that you wear that you put in your pants when you're skiing.
Yeah, of course. Sure.
So I started to get those, and I started to put those in the bee houses, so to warm them up, to keep them warm in the winter.
That is just so cute. It's like you bring them a little blankie.
Yeah.
That's
adorable.
Awesome.
All right. Jason Perz
today
will be doing the Gold Rush video today. For those of you who got the Gold Rush, stay tuned for that. The report went out last night, right? I believe, or maybe this morning. I don't know which, but it's out there. Jason, we'll see you later on. Thanks for coming on today, man. And
of course,
good stuff.
All right, thanks, Spencer. See you guys.
All right. Hey, we got a good old fashioned short report this morning, Steve.
The Hindenburger is going after the super micro internet computer chips.
They are.
You couldn't have seen this one coming. I say this all the time. These guys are not dumb. They try to break down charts that are vulnerable. Do you remember the last short report that we talked about on the show? It was Riot, and it was trading at a shelf of former lows. It looked so ready to break down. They're thinking we could be the catalyst that pushes that pattern over the edge, and then it becomes a momentum trade. And trust me, they're covering that short a day, 2 days, maybe the day that the short report came out. These people are really truly dirtbags in our industry.
Didn't that other criminal that got
Andrew left?
Didn't they doing that thing is like illegal?
Well, no,
common sense, right?
The way he was doing it was super illegal.
The way he was going about it was...
Well, he was doing it even worse because he was letting other hedge funds know that were paying him that he was about to drop that report. So it was even worse. But let's just say that these Hindenburger people, let's just say that they're not doing that. Let's just say what Strazza was saying, that they're just covering on their own. That in and of itself is also illegal. Am I right?
Well, the SEC was basically like, you can't come out with a short report and like sell into it like immediately, right? That's what Left was doing. So I don't know. I don't know what they're doing. I haven't read the report. I've read the highlights of it, and it's related to a lot of business dealings from a couple of years ago, right? 2018, 19, 20. Also, so highlighting their relationships with key customers and that sort of thing. But
it's technically not illegal if you do it the right way. However, these guys tend to do it in a way where they're lying in their report, right? And they're using that report as like exit liquidity. That's what you can't do. If you say in your disclosures, we're short, whatever, you can't be covering like into the report. The regulators will eventually come find you. But it's all really about intent, right? If the intention is not to deceive and use the people that are reading the report, then you could be okay. But it's still just, listen, we thought about having the guy on, one of the guys on from Carousel, who worked on one of these Bitcoin miner short reports, but we're not going to have them on the show because I think that would be a disservice to everybody who watches. I'm not going to give them a platform to talk about any of this garbage. But coming after SMCI today, I just don't think it's a shocker at all when you look at this, this little topping formation that just completed.
We have the chart. I think we do. I thought we did. Maybe not. There we go.
I mean, look, why not short this here? Do you need a short report? That's a
suppose not.
Bearish pattern.
What was the reason, quote unquote, that this thing was absolutely ripping?
AI.
It was an AI thing, but it's a hardware company, isn't it?
Yeah, they sell like the servers and stuff. Is that right?
Mm-hmm. Yep.
They're like AI infrastructure.
All right. Looks like a top breakdown, retest, and rollover, right?
That's right.
Down another 7% today, down to 518. This obviously is not something that we'd want to buy. Looks pretty terrible. Shout out to Super Micro.
You don't want to see AI leaders like this roll over more and more. Those charts that we kept on showing for a few weeks back, the Dell, the Micron, the AMD. You want these AI trade stocks, these early cycle leaders, to at least hang on. They don't need to keep outperforming the whole market, but you don't want to see them roll over and start trending lower on an absolute basis. And that's what's going on here with Super Micro. So it's on a very short list right now of some of these AI leaders that are breaking down, but you don't want to see that list and names grow.
Speaking of stocks down 7%, Kava down 7% this morning. Their largest shareholder filed to sell a large block, and a couple of the executives are just exercising some stock options.
I can't eat that crap. So I gotta update you guys. JC, you'll love this. I got some DMs last week. DMs that somebody slid right in, and boy, were they upset about the comments that were made on here about Palantir. Like just jacked up. It's not a cybersecurity stock. I'm like, listen, I don't care as much as you do. Clearly,
clearly, I'm not as emotional about it as you are.
That's what you're talking about, right? When you talk about the stock, it's an emotional ticker.
Was it somebody you knew, or just a random crazy?
Like a friend of the show? No, not even crazy, but just like wanted to set the record straight. Okay, all right, great.
Well, I mean, were they emotional about it, or were they just being like, "Hey, I'm a little bit more informed than you guys, and it's actually not a cybersecurity"? Like, was it like a general, or was it like, "You guys suck, you guys don't know anything"?
No, this is a friend of the show. We do have constructive discourse about other things, but I'll just read it. It was somewhat emotional. So I get what you're alluding to, the black box side of the business, but that's not cybersecurity. Would Raytheon Technologies be included in hack as well? No, that's a stretch. Palantir's data output is certainly something a cybersecurity provider would use, but they do not do security per se. Nope. Okay.
All right.
So you heard it here. Maybe it's not cybersecurity. The bottom line is it's a chart that we want to be buying. It isn't, the growth there is really, really, really nice. This company's really just turning the corner right here. It's just starting to get things going. And I think you could treat this like it's at new all-time highs. We talked about it last week. You're basically...
By the way, Raytheon might not be in it, but Northrop Grumman is, and General Dynamics is. I'm kind of surprised Raytheon isn't, to be honest with you.
Yeah, listen, it's when it's that big of a gray area, it is what it is. And we're not trying to be fundamental experts in the cybersecurity industry, but I think it's cybersecurity.
As far as I know, the less I know, the better. Peter says he wants to short Palantir out of principle. Wow,
hey, this is what we're talking about. It's
a pretty terrible principle.
Somebody write a short report on this one.
I don't have those kind of principles. I like to buy things that I think I could sell higher.
So look,
higher prices.
Gentlemen, are we just about through earnings season?
Yeah,
just about. But we do have some insider transactions that I'd like to talk about, if you will.
Do we ever, huh?
The CFO of Build.com dropping $3 million. Hello.
I have a joke. Run the bumper.
Can we?
So hot right now.
So first of all, Build.com is in this list of names of like really bad looking downtrends that just can't break down, right? We talk about the no new lows situation that's been happening. Even the worst ones, Zoom, Peloton, Unity Software. What do we have last week? The Snowflake, right? They can't break down these terrible stocks. Bill's one of them. We joke internally that we can make a custom index of they call it a tech stack, right? The software and the different things that we use as a firm to run. And if we made a custom index, this thing would be terrible. Bill.com is one of these names. It's one of these like startup, digital professional services shops where we do payment and invoice stuff through there. But a lot of these names, JC, over the years, whether it's like HubSpot, Slack wasn't great. A lot of these things that we use in our tech stock, not the best names. We could probably build a good short universe around them. So Bill.com on our list today. 3 million is not nothing. CFO, love to see it. But this chart's got to turn around a little bit. What really stood out from today's list, don't call him a piker. The chief product officer, I don't think these guys get paid too much. Chief product, I don't know. I don't even know what that is. I've never worked at a company with a chief product officer. So the CPO, 133,000. Is it good enough for you? Peloton, we wrote about this one last week. The squeeze certainly looks like it's on. I got long for a little squeezy last week. No? Am I crazy? These charts are working. Look at the Zoom too. They're not breaking down. They're actually hooking and squeezing higher. And the CPO wants a piece. I like it. I really like it.
I don't hate these strategies because of what you just said. These things, the worst names just can't break down. And if they can't break down, then there's only one way they can go is up. And it doesn't mean that fundamentally things are better or that it's not going to go to zero. Like, none of those things matter. Like, it can go to zero after we take profits, you see. We don't have to give the profits back because the bag holders never took profits, right? Like, you can be a bag holder if you want or not. You can buy stocks that are on their way to zero. In fact, you get monster moves. Look at Carvana, classic example of a stock that everyone, including us, were surprised it wasn't at zero yet, and then it went up like 1,000%.
Yeah,
right?
and even more so, you could take this theme like one step further and start to look at the upstarts of the world or the PayPals. Not only are those charts not breaking down, these speculative tech laggards, PayPal's trading at fresh 52-week highs up here. These bases are actually starting to look like they're completing to the upside, not to the downside. In some of these worst names. I think that's an incredibly bullish development. Something that's not being talked about too much right now, but these speculative growth stocks, right? The not profitable tech, all these problem names, starting to look better and better. I mean, and we've gone back to the well kind of on this sort of situation all year. Like, we've talked about the Chewy, earlier this year, just running some of these stocks that refuse to break down when they're at new lows. It's not that these are high probability trades, but they can be very high risk reward trades if you pick your spots well. And I think we'll be talking more and more about these speculative tech stocks.
And it also depends on the environment that we're in. Like, if we're in a bear market and stocks are going down, they're going to knock down the worst names, and bottom fishing some of this garbage is probably a bad idea. But I don't know if you heard, but we've been in a raging bull market for over 2 years now. And a lot of these stocks have gotten killed in that environment, showing that relative weakness. And at key support, whether it's Zoom or Peloton or Carvana or any of these garbage companies, if they can't knock them down, it's a bull market. They're going to come in and buy them because it has a lot less to do with the company dynamics itself and the fundamentals and what's actually going on, and more so how the market is positioned in those names. And there are additional market forces and dynamics taking place that have nothing to do with the corporate fundamentals that are driving these stocks substantially higher. Again, not 5-10% moves, but 100, 200, 300% moves. Like, these are huge moves, man.
For a stock to rise in price, it's very simple. You need incremental buyers, and those incremental buyers need to be larger than the sellers, right? But the same thing works to the downside. Some of these heavily shorted names, these cycle laggards that are trading near new lows, they need incremental sellers. They need people to keep coming in every day and shorting the stock more and more, selling the stock more and more, right? And they need to outnumber the buyers every day. And when we see short interests get jacked 20, 30, 40%, you have to ask yourself, are there really that many incremental sellers waiting in the wings to short this thing? It's already down 85% in some cases, right? And then the market sees that. We're not the only people who watch this kind of positioning. The market sees that and they smell an opportunity, right? And they'll send it in the other direction. And we call that short squeeze. And it's going on with a lot of these names right now. Something like PayPal, that one probably doesn't have a hefty short interest at all. But man, has this thing been banged up. I'm sure it's coming onto people's radars more and more now that it's trading at new highs. Look at how tight that is. It's just been dead in this range. We're going to put a trade on that this week.
Throw up slide 2, please, Spencer.
You know who else likes it? JB into the PayPal. Shout out Compound and Friends.
Shout out Compound and Friends. Actually, I'll be talking to JB later this afternoon. So this is what Strazza's talking about. This is Zoom. All of us were as surprised as you guys were that this is not a zero yet.
Yeah, not a zero.
Very surprising that this is not a zero. To actually up 40% in the last week, 2 weeks, 40%. It doesn't mean that it's not going to go to zero. It doesn't mean that they just completely changed the company around and now it's a turnaround story and we're back, baby. Maybe. I doubt it. It's probably still a zero, but that doesn't mean that anybody in this trade has to give their profits back. 40% on the common stock, and if you're in the options, well, now you're talking about hundreds of % return. So kudos to everybody in the breakout multiplier. Shout out Strazza. Flowers to you.
Not a zero yet.
Not a zero yet.
Is what we're interested in, right? So this one, we took the money, right? Because sometimes when you're good, you just get lucky. This one was a big earnings save in terms of the breakout multiplier trade that we had on it. So we're out. We took that money.
Can you touch on that a second, Strazza, if you don't mind?
What?
Because I think that this is a really important conversation. And, there's something to be said with, I know Sean, for example, a great example. He he likes to cut his losses when his call options get cut in half, right? And just call it a day. And that's one way to do it. Me, how I do it, if I buy the call option, almost always I'm writing it off. Like the money's gone. Unless there's like a really well-defined risk where if we close below a certain price, all bets are off and I take it off. That does happen too. But generally speaking, outside of that situation, if I'm buying a call option, I assume it's a zero. I'm okay with that. Can you talk about like kind of like the position you were in going into earnings there?
By the time some of these positions that are not working, or at least start out not working, by the time the chart looks so bad that we wouldn't want to be in it anymore, you're down 70%, right? We're trading short dated calls. So then you have to make a decision like, do I close these, right? Down 70% and take whatever it is left, $100, on a contract? Or do I just let it ride? It comes down to the system too. You have to let a system work. And in breakout multiplier, we're really there for the home runs. We're not there to just sell doubles over and over. We're there to go 4, 5, 6x on some positions that we do sell doubles on, right? Because that will make the system work over time. And we do that enough times over and over and over again. We hit those home runs, the system really works. So you look at something like Zoom a few weeks ago, before it had this, magnificent run over the past few weeks, and we're down 50% on it. And we know earnings is coming up. And a lot of these speculative growth stocks are beating earnings, or not even beating earnings, but reacting positively to, those reports. And we said, listen, we could close it and take, half of our premium back, close it for 50% loss, or we just let it run, just let it ride. It still looked okay. It was holding its levels. You could see it down there at the pivot lows back in July. Tested them, it held. We said, chart's not broken. Why not let it ride? Maybe earnings saves us. And it did. Earnings came out, saved us in a huge way. We sold this one, for an exponential profit.
I want to get back to these to this Bill.com because this strikes me as one of these examples. We have the CFO, Strazza's favorite, $3.1 million buying Bill.com, and this thing has gotten crushed.
That's a big buy, JC.
You think it's a good buy or a goodbye?
No, that's a big buy. Listen, it's a sizable purchase. I don't know. The chart doesn't look great.
Looks terrible.
But that is a material Form 4 filing for sure.
What does Bill.com, what would it need to do to get you interested?
Print a primary trend reversal, and I am adding it to our Screaming Hot list right now.
So you're looking for like a weekly MACD crossover, more specifically, you think?
Yeah, I want to know that the primary trend has shifted higher, and then we'll follow the CFO in. We're likely to pay a higher price than him, but we'll be in when the trade starts to work, is the idea. Once the trend is with us, then we'll join him. And if we have to pay $10 more a share or something, that's okay.
Not a lot of shorts.
An opportunity cost.
Not a lot of shorts here. Does that surprise you? There's no short interest in Bill.com?
Oh, what is it? I didn't know what you're
2%.
Yeah. What are you gonna do? Listen, they can't all be perfect.
Yeah. I would very much like it if there was more short interest here, right?
We like it when they hate it. We really do.
I'm a little surprised that there's no short interest there.
Yeah. Disappointed, you seem.
They don't hate it enough. By the way, Jason Perz absolutely looks like a young Mel Brooks. Like
Albert Brooks.
Excuse me, Albert Brooks.
Albert Brooks. Yeah, he does.
Excuse me. Wow.
Yeah.
Can we throw that up just quickly? I mean, just
Dude,
throw that up.
do we need to?
Yes, let's do it.
I don't know if we need to.
Slide 2. Can we please tell me that Jason Perz doesn't look exactly
I don't know
like
if we need.
Wow.
Okay.
Wow. There he is, Jason Perz himself. Join him.
Wow. That is very impressive. Very impressive.
Okay.
All right,
Hey.
Spencer, listen, before recess, what do we need to know? Give it to me. Give it to me straight, Spencer.
No, there's not much to know, but before recess, we got Patrick in the house.
Oh, bring him in.
Yeah, Pat, let's do it, man. Long time no see. What up?
Fellas, how we doing?
Oh, handsome alert.
Pat's like moving. Pat, do you have a home right now, or not really?
I'm one of California's many homeless.
Okay, great.
They got those there. If you're going to be homeless anywhere, California is a pretty good place to do that.
Yeah.
I understand it. I get it.
Pat, I don't think there's anybody in the world who monitors what the smartest technicians in the world are saying on a day-to-day basis. I'd love to hear sort of your perspective. Like, what are you seeing out there in terms of sentiment? Dow Jones Industrial Average, new all-time highs yesterday. You think that people are embracing these new highs? You think they're trying to fight them? Like, how do you think about the chatter out there?
It's getting tough to gauge sentiment when I only listen to technicians. You ever think about that? Like, am I just seeing it because everyone I follow sees it, or is it, is that actually how the crowd feels? But I think that VIX blow up did freak a lot of people out, caught a lot of people off guard.
Good way, you're saying?
Yeah, exactly. Yeah, kind of reset sentiment in a healthier way. So I think, when sentiment is kind of hard to read and it's not obvious, maybe it's not super important. So kind of tough to get a huge signal there. As far as what they're talking about, though, yesterday was a lot of crude oil. A lot of people are looking at it kind of coiling up here, and is it going to finally pick a direction and start trending in it for a few months? We haven't really had a defined trend for a while in crude oil.
Yeah, crude oil, dollar, rates, kind of just been messy. Crude oil, part of that messiness.
Yeah. Man, the dollar just absolutely taken to the woodshed.
Yep.
You think
is that bad for stocks, you think?
No. You think it sticks here? You think it gets a little bounce at this 100 level?
I mean, just the strength that we're seeing in emerging market currencies. I mean, that to me has been the most impressive thing. Like, that's no joke. Like these the EM Forex, it's just seeing strength there. It just doesn't strike me as something that's risk off. Doesn't strike me as evidence of risk aversion,
Yeah. You looking at the zloty?
Of course. Polish zloty making new highs. I mean, if you're not looking at the zloty, like, are you even trying?
What other than the zloty? What else you got?
Well, I mean, we could talk about the dong if you want. I know Strazza just kind of stepped away, but we could go dong if you want. You could talk about the Thai baht. You could talk about the Malaysian ringgit. The Philippines peso. I mean, we could go down the list, but I mean, the strength has been there. No?
Just basically showing risk appetite, right?
I mean, just go down the list. I mean, it's just one. I mean, all of these EM currencies, except for the rupee, like the rupee is like its own thing. Even South African rand has been up all year. It's like the rupee and the Mexican peso are like the two that are just not working. Something interesting there because the rest of them are. So like Wisdom Tree has an equally weighted basket of 14 emerging market currencies in their emerging market currency ETF. CEW, it's making new 3-year highs, right? So that's what stands out to me. It's, instead of cherry picking like, oh, Korean won looks great, or Thai baht, Philippine peso, there's others that don't. Brazilian real, for example, Colombian peso, rupee in India, just not participating, but the others are. So when you take a weight of the evidence, the weight of the evidence by far exceeds the negativeness from emerging market currencies, right? A lot more positives.
Yeah, I see what you're talking about with CEW. That definitely looks like a bottom of some sorts, right?
I mean, and zoom out, right? Zoom out.
Yeah.
Like, I mean, this thing's been trying to put in a bottom for several years now.
Yeah, that's one that I haven't looked at in forever. CEW.
That's right.
Hey, what about real estate? Right, finally firming up a little bit.
Pat, I was promised that the real estate market was going to make the market crash, right? Real estate was going to bring down this house of cards that we call the United States stock market. I see real estate going out at new 52-week highs every week. I'm just not seeing this house of cards. What do you think here? Here's the XLRE. So this is the real estate index fund, right?
Yeah, so it's strongest sector in Q3. And I was looking at it, if the month closed here, it would be the strongest 4-month stretch It's been up 4 months in a row, but it would be the strongest 4-month stretch in the history of XLRE, which it's only been around 10 years.
I was going to say, hasn't been around that long. I guess it's been around, wow, it's been around since 2015. It's actually longer than I thought.
Yeah, so almost a decade. Not super impressive, but it's something. I mean, 4 months in a row, pretty strong gain here. And obviously with interest rates finally coming down here, the sector's working a bit. And then you got the home builders too. You know, I think the fact that the home builders are leading us out of this correction, I think is a really good sign. Home builders and semis have really been the leaders throughout this whole cycle. So seeing them lead is actually is a really good sign here.
So new all-time highs for home construction. Man, so just real estate in general, a big theme from the depressed perma-bear community for quite some time has been homes, real estate, bringing the whole house of cards down, and it just continues to be the opposite of that. These are the drivers that continue to drive things higher.
Yeah, I mean, I saw a post today, somebody talking about how we're in the biggest housing bubble in history. It's always nice waking up to those tweets, right?
No, that's a good thing. It's when they stop tweeting those things out. It's when they tell you that it's not a bubble. That's when they stop making up reasons to scare you.
Not
they
a
can't
bubble.
come up with anything else. That's when the problem starts.
Not a bubble. Just because an asset is inflated does not mean it's in a bubble.
The only thing a bubble means, the people that are calling it bubble are the people that just don't own it. Like that's a bubble is anything going up that you don't own.
That's true.
There you go.
That's rule of thumb.
Just because something is expensive doesn't mean it's in a bubble. Dear
I've been
Lord.
observing these perma bears for decades now, like a zoo. Like, you know, when you go to the zoo and you see like the weird animals, like those are like the perma bears. You observe their behaviors. I've been doing that for some time. They are very. You can't leave your kids around perma bears. Don't leave your kids near perma bears. That is rule number one of parenting. Keep your kids away from perma bears, parents. They cannot be trusted.
Advice.
All right.
Creepy bastards. Mr. Strazza, I need to hear about the Tiger King situation.
Okay.
Florida man.
No, I want to tell you about it. I brought a lot of pictures.
All right, let's see them.
First, stop. We had a truly, I think, a million sigma event occur at the pool at Marco Island yesterday morning. Patrick knows exactly what happened. So I'm walking into the pool area. It's 9:30 in the morning. It's our last day there at Marco. Getting ready to, one last dip. Gonna get on the road. And I hear my name. Is that Steve Strazza? I turn, and lo and behold, who else could it be but Todd Sohn, morning show favorite, good friend of mine. Got to meet the whole family. He was on like a thing. His brothers and sisters were there, a bunch of kids. The resort's great for kids too. They got like a full arcade. I went hard in the arcade. So it was incredible bumping into Todd like that. Throw up the picture of me and Todd in our pool get up. Look at us. Look at us.
I find it hard to believe that you guys didn't know that you were going to be in the same hotel.
Maybe we did. Maybe we're working on something.
I think you did. I think
maybe
you did.
Maybe we met there on purpose.
I'm pretty sure that's what happened. Yeah. Your bromance is too strong for this to have been a coincidence.
But seriously, it's very rare to find another technician in the wild, but it does happen. I don't know how many sigmas. It's a lot of sigmas. It does happen. That happens. So anyway, I don't want to talk about Marco. What happened was we had a 5-hour road trip home yesterday. And we like to have fun when we do these things. So we're driving through. It's a 2-hour trip just to get back to like the top of the Florida Keys, and then you're in Largo, and then it's 3 hours back to my house from there. But the 2 hours from Marco over to Homestead or Key Largo, you're really just driving on one road. Like JC said, maybe it was Alligator Alley. We're on Tamiami Drive or something like this. But you're passing airboat tour after airboat tour after Gator Show, after Indian Reservation gas station, and I just can't not stop at something like that. So we stopped first at this post office. And I swear it was the size of a toll booth on the Jersey Turnpike. This man, I don't think an email comes in or out of it. This is a real post office. This guy sits there and takes pictures with people all day. Takes pictures with crazy tourists.
This is the smallest post office in the country. I'm very familiar.
Dude, this was incredible.
No, I know it because when I was a kid, we'd drive by and my dad would always tell me, This
Yeah.
is in the Guinness Book of World Records.
I was on that
boat.
road. So something else was on the Guinness
True.
Book of World. Something else was on the Guinness Book of World Records that I saw yesterday. We'll get there. So the postman said, I said, where can I get some gator? I just need to, like, I was ready to go for it. Where do I get the gator? He said, just the next stop. This is like a famous restaurant. It's one of the oldest buildings in the Everglades. So we went to Joni's Blue Crab Cafe. And boy, is there a rich history here. If you look up top on the walls, so I said, what's going on with these pictures? And Joni said, we used to have like a periodical. It was basically like a niche Playboy for swamp people. And they would take the pictures here. And they're all over the walls. So anyway, we'll move on from that. We had our gator bite, started talking to the locals. And they said, we got the biggest python in the world, like 5 minutes down the road. Go to this gas station, right? And they'll put you through the back and you could see the python. We said, okay. So we went and we looked at the python. So our next stop was Skunk Ape headquarters. So the Skunk Ape is a big, what do you call this? It's like the Sasquatch of the Everglades. They have their own Bigfoot. It's different from the other Bigfoot. They call it the
Throw
skunk.
it up. Throw it up.
Go
This
next.
is the most Florida segment we've ever had on the show. I can't
This is
take
some
it.
serious Florida man
can't
shit,
take
and
it.
I'm loving every second of it. Give me more.
Me and Rose had a moment, and we were like, let's just do all of these things. Like, let's go to all of them, right? So we went to the Skunk Ape headquarters. That's the Skunk Ape. Next picture.
This is an Everglades Sasquatch.
This is a real Florida panther in the wild. They're big. All right. Next picture. Oh, all right. So then we went to a gator show and we ended up walking. So this was right down the street. The next stop after the Skunk Ape headquarters. Skunk Ape headquarters has the second largest python in the world. It's not a Burmese python. It's the second largest. The Guinness World Records people were out there just last week, and it's like 2 inches smaller than a python at the Ohio Zoo. This is it's basically a gas station. It's in a little room behind a gas station. And it's going to be the biggest soon. It's 24 feet long. I mean, this snake is bigger than your head. It's really scary. So anyway, then we stopped at Wooten's, and this was truly a Tiger King experience for us. We did a gator show, and then we saw the lion, and the lion I'm not the type, I don't want to complain about somebody else's business, but it was really sad. This lion had warts all over its body. Go to the next one. Rose did not approve. So we had to pretty much leave after we saw she's thumbs down to the lion. We had to leave after we saw the lion because that was sad. They had like a 16-foot crocodile in one tank too. That's like, it's tough. It's really tough. There might be a Netflix documentary on the place that I went to now. So I bought a shirt. I couldn't leave without getting a shirt. We were in full Everglades getup. The alligator is just like biting on a stick all day. And his mouth is bleeding. This guy was this was a special human that we met. The man who wrestles the gators there. That was his 5th show of the day. The gator was tired. These things can live up to 100 years and they keep growing. Really, really something. So we stopped at what do you call it? It was like an animal zoo. It was exactly what you think. They're just in these tiny little cages everywhere, and they're getting more lions. But there's like 4 of these places just on that road. You just pass them over and over and over again. We went to some of the state parks too. We saw the gator show. What else? What other pictures did I bring? And yeah, you can't drive from one side of Florida to the other without getting boiled peanuts. I'm pretty good at specializing in the food that you should eat when you drive through certain places. When you're driving through Central Florida or the middle of the state of Florida, you got to get the boiled peanuts. They were excellent. I prefer the original over the Cajun.
Wait, what's the texture like? Are they like?
You've never had boiled peanuts?
No.
Oh, they're really good. They're really good.
Okay.
It's a good driving food too, but then your fingers get nasty, so you got to have some sanitizer in the car. They're wet. They boil them in a pot of water with a bunch of like seasonings and stuff.
Are they like softer than normal peanuts?
No, they're soft. They're soft. They're like melt in your mouth. You guys have never had boiled peanuts? I'm the only one.
I mean, I certainly haven't, and I never will.
I've never heard of boiled peanuts.
Oh yeah, you're allergic.
Well,
Yeah.
I did some real Florida man things yesterday.
Dude, this is like next level Florida man shit. You're going to the world's smallest post office. You're seeing the Sasquatch of the Everglades. You're eating alligator. You're going to the Playboy shoot location for Everglades women. What do they call them?
I don't know
ladies.
the name of. We
Swamp
laughed
ladies?
after we kind of found that out.
Man, that is something.
But Joni's Blue Crab Cafe, like, stop there. It was one of the, like, it was on a swamp. Like, it was just really cool sitting there eating some good. We had a skunk ape lager. So you got to drink the local beer when you're there. It's made with fresh swamp water. It was excellent.
Of course it is.
Show how close I got to the alligator. Alfonso, I showed that to the guys. Alfonso texted me. He's like, "Are you okay?" I got really close. Because, and the reason I did that, it's like the second picture. The reason I did that is because I went to a gator show. So I now know how to fight them. So I would have known exactly what to do. In fact, I was kind of like, come on, yeah.
Steve,
was
do
ready.
not try to fight a gator.
I would not do that. But if you're ever getting chased by a gator, you got to go zigzag because they don't have the peripheral vision.
They told me that's not true. That's
really.
They told me
that my whole life. Is that not true?
Dude, I swear to God, the guy said just kick it in the nose.
Kick it in the nose.
He said forget the zigzags, just kick it in the nose.
Oh man.
That's
all right.
About
this was great.
Yeah.
Great segment. Great. We need more
a shower.
Florida Man segments. Can we just send Strazza? Can we just get like can we do a GoFundMe account so we could just send Strazza to random places in Florida and get feedback?
We might have to start like a travel blog.
I was gonna say you should interview some of these swamp people. I'd love to hear some of their opinions.
Oh,
we love Robert. We love Robert is here, Billy. Shout out Robert is here. Best farmers market in the world in Homestead. Right as you get out of the Keys, you got to stop every time. We were there yesterday afternoon, actually, and we will go back. We will be going back to the Everglades. We're going to do a whole thing there because we didn't have enough.
Now you have so many friends now in the.
We did make some friends. Yeah, we really did.
And all those friends are related. All right, that's what we got.
Probably.
In an hour from now, Twitter Spaces with Chart Request Live. We'll see you there. Chart Request Live at or Twitter Spaces with the Chart Report. Chart Request Live at 1:00. That's what I meant to say. Mm-hmm. So that's what we got. Charts. Thanks, Jason, for hanging out. Thanks, Pat, for hanging out. Thanks, Chad, for hanging out. Go make money. We'll see you later.
Adios.
Cheers.
I can't take no loss. I don't even know what it costs.